Hello, everyone. My name is Steve Killingsworth, and I'm an investor here in Michigan. You know how most people want passive income but don't know how to get that, especially in commercial real estate? Well, what we do is find passive income opportunities for people we trust, and them to invest with us. We believe in breathing new life into overlooked properties by cleaning them up and converting them from eyesores into pillars of the community. And of course, that's a win-win for everyone. What we have for you today is the Storage Quarter 2021 Earnings Call Recap. There's lots to cover, so let's get into it. First off, we'll cover the financial performance. With this strong performance, we are once again increasing our guidance for 2021 year. Funds from operations for the third quarter increased 35% over the same quarter from last year. That's just astonishing, amazing number. That 35% increase in quarterly funds from operations. Third quarter same-store revenue accelerated significantly again to 17.4% year over year and up from 14.7% from the second quarter. This had a net effect of expanding operating income margins by almost 4% to 70.7%. I mean, that's fantastic. Results again, 24% year-over-year growth in same-store NOI for the third quarter. So not much of a surprise that LifeSpace is killing it. All the big REITs, I mean, they're seeing and reporting fantastic financial performance numbers. Let's take a deeper dive. One of the analysts asked, should we be expecting more rate increases throughout the year and into 2022? The CEO responded by saying 60% of our customers are still below the street rate. I think that sets us up nicely to be aggressive again in 22 from an in-place customer perspective. Then asked specifically about when in the life cycle, customer life cycle, do you initiate rental increases? And he responded by saying about 5 months in is when we see our first increase. And we've been more aggressive on that first one when it goes into place. And the second one beyond that, we've been even more aggressive. We have the ability to increase current customers and watch that move out rate. And we haven't seen any significant fluctuations in that. And we'll continue to be aggressive next year. Next, they asked a little more specifically about that revenue growth of 17.4%. Where's the breakout? Is that coming from existing customer rental increase or more higher move-in rates? And he says, if you look at looking at our street rates, the way they were, our move-in out rates were upper teens, 20%. So it's relatively split. If you look at our existing customer rental increase, your average is pretty even. Things to know from a CEO, our Warehouse Anywhere business. Now, you gotta always know what the competition's doing and what the latest trends are. So the Warehouse Anywhere business. So this is geared towards large corporations. It targets large corporate accounts and it supports their desire to use self-storage to meet their inventory needs. Okay, so he feels that's an untapped market. So we think that's going to continue to be a good opportunity for us. Okay, next then you have what's called the micro fulfillment center. They're light speed. Also, in addition, further discussion on the micro fulfillment centers. The micro fulfillment we're seeing are smaller businesses trying to figure out their logistic needs. Okay, like for example, medical device companies. We have a lot of service tech industry and like ATM providers, companies that have manufactured cars but don't have dealers. They need to have product close to their service technicians who are working remote. So it's really getting equipment closer to the service techs rather than supply chain issues. Quickly, 3 questions that the analyst should have asked. If I was on the call, here are 3 questions I would have asked. First up, I definitely would have asked about how the company is using technology to meet their customer needs. I would also ask how much of the top line growth is attributed to boat and RV parking. How do they break out that compared to traditional storage? I always want to know that metric. And then I always ask, what is one perk customers will pay extra for? What's that value add? What's that one extra thing that'll really drive high margin perk? That's all I had today. Go Blue.